I'm going to say officially good morning to everyone, and glad to have you here this morning with us for this webinar titled How to Prepare and Obtain Business Bank Loans. My name's Warren Mueller. I'm one of the business coaches with the North Idaho SBDC, and I think this is going to be a special webinar because we have a real live banker with us today. And we're going to ask him a whole bunch of questions about loans and how do you get them and how do you prepare for them and all that kind of stuff. And in addition to that, we have the chat box open. So as we go along, if you have any particular questions that you'd like to ask, we'll try to get those in front of the banker also and get those answered. So our banker this morning is Mr. Brent Jussel, who is the Senior Loan Consultant for Panhandle Area Council here in Hayden, Idaho. And so Brent, good morning. Glad to have you with us. And before we jump into our list of questions, maybe you could say a couple of things about you, your background, what you'd like people to know, and just to let them know that, you know, bankers are humans too.
Well, thanks, Warren. I've been called a lot of things, and human isn't one of them, but that's okay. Well, good morning to all of you and Warren. Thanks for the invitation. As Warren mentioned, I'm a reformed and retired banker. I spent over 30 years in the banking industry in commercial lending and agricultural lending. I retired 4 years ago. At least I tried to retire. And the fine folks at Panhandle Area Council called me up. I'd known them for a long time, and they asked me to help them out with projects. And it's actually been a lot of fun. I've enjoyed that. And also in my other retirement gig, if you will, is I do help out at the Small Business Development Center at the College of Southern Idaho, which is in Twin Falls, but we work remotely these days. Always a pleasure to collaborate with Warren and the folks from North Idaho College. So,
all right.
As Warren knows, for all of you, I don't know all the answers, but today I don't think any question is a bad question. And if we don't know the answers, we will make notes and research it and get back with you.
Excellent, excellent. So maybe as a way to get into this subject, maybe you could just give us a brief discussion of what the typical SBA-backed loan products are. You know, people are going to hear these acronyms and names, and maybe you could just explain what the most common ones are that they're likely to face.
Yeah, that's an ever-changing landscape, Warren. Maybe we start with SBA loans. There are a handful of different SBA loan programs. A particular program that's administered throughout the state of Idaho by Panhandle Area Council is the SBA 504 loan program. It's a great program, has low down payments, long-term fixed interest rates, but it is limited to fixed assets only. So you can do real estate and equipment, leasehold improvements, but that's the limitation to it. It's a great program. Use it all the time. The SBA 7A program is a loan that's typically provided by banks and credit unions. It is partially guaranteed by the federal government through the U.S. Small Business Administration, and it's very broad. It can be used for everything that I just mentioned, plus inventory, working capital, partnership buyouts, business acquisitions. It's very broad. And we do help people navigate through that program as well. There's the SBA micro loan program. And unfortunately, there's only one source left for that in Idaho. That's through a nonprofit organization in Boise delivers that program. And it is limited to loans of not more than $50,000. And we can get you contact information on who those folks are and how that program works. Also, just as a matter of mention, In most of northern Idaho, there is a program available through the U.S. Department of Agriculture, which sounds unfamiliar because, what's USDA doing messing around with small business loans? It's much like the SBA 7A program, and it's delivered by banks and credit unions typically, and the USDA guarantees a portion of it, but it is intended for businesses in rural communities. And in other than the city of Coeur d'Alene, not the county of Kootenai, but the city of Coeur d'Alene, it's eligible in all of northern Idaho. And we can help you navigate through that too. The last, I call them buckets of money, is through the U.S. Department of Economic Development and I should say the Economic Development Administration. And Panhandle Area Council also administers that loan program now throughout the state of Idaho, not just northern Idaho. And it's very similar. It's very broad, fixed asset inventory, working capital. It's not for the great big loans, Warren. It's typically loans of $250,000 or less. There are occasions when it can be more than that, but that's kind of the target. So that, as you can tell, there's a lot of different programs out there, and they're constantly changing. And it's hell to try to keep up with all of them, but we do try to keep up on things. And again, if we don't know the answers, we'll try to get them.
Excellent, excellent. So maybe as a way to set the context here, let's think in terms of a small business that is either a startup or it's a small business that's been in business for maybe 2 years or a little bit more. And this business is looking to expand or to grow or to scale up. A good example is the person who cooks or bakes or something like that, and they've been selling at farmers markets for 2 years and they've been very successful at that. Now they want to build a kitchen, or they want to build a store or something like that, and they need a loan in order, or they think they need a loan in order to do that. How does that person go about figuring out how much to ask for a loan?
Well, yeah, again, great question, Warren. The core document that we use, and not to get too far into the weeds with it, is a sources and uses of funds document. And we're always happy to collaborate with the SBDC or small business owners to develop that. But what I tell people is write down everything you think you will need, whether that be equipment, building improvements. You're going to buy a building, you're going to lease a building, and keep a notepad by your bedside, so that when you're up at 2 o'clock in the morning and you think of something, write it down. And I think by collaborating with SBDC or us or a combination of all the above, everybody will have a different idea or something that comes up. An example of that, Warren, was I was talking to a gentleman up in the Sandpoint area this week, and he really did a great job of pinning down his project costs. But I went through it. I asked him a couple of questions, and one of the things that he innocently forgot to put down was signage for his building. And in his case, it's a lot of signage, and it's about $100,000.
Wow.
But that was not included in his budget. So that's why I say just write down everything you possibly think of that you're going to need. And then I guess from a cash flow and working capital standpoint, and we'll probably get into that later, Warren, would be you got to have a cash flow projection that determines what your inventory needs are going to be, because you may have accounts receivable. You may have to do an initial stocking of inventory to get stuff on the shelves so that you can sell it. Might be a timing difference between when you sell the product and when you get paid for it. So measuring your cash in your trading assets, specifically cash, accounts receivable, and inventory up front is really going to help you a lot determine, Warren, what you really need. And then the caveat to that is how much of your own money do you have to put into it? But that's a different topic.
So that's a great segue into the next question, which is, okay, I think I know, roughly speaking, how much I'm going to ask for. What do I have to put up in terms of my own cash in order, like a down payment? What's that called, and how much do I have to put up?
So, not that this would surprise you, Warren, but there's a couple of different ways to answer that question. If you were putting on your SBA and USDA hat, their regulations are as a minimum of 10%.
Okay.
10% of your project costs. Now, however, in the case of those types of loans, not the 504 loans specifically, but the 7A and the USDA loan and the EDA loan, the lender has the right to require additional down payment if they think that fits in their policies and procedures better. So what I tell people is plan on a minimum of 10, and it could be more. I'm always full of stories, but I was talking to some folks earlier this month, and they want to do a startup restaurant, and the lender's requiring 30% down.
Oh, okay.
So it's kind of all over the board, and it depends on the lender and what their appetite is. But the technical answer to your question is typically 10%. It could be more.
Okay, excellent. Now, as someone's starting this process, writing down what they think they need, and then thinking about, okay, how much am I going to have to come up with personally? Are there some other issues in a person's life and background that could stop this loan process dead in its tracks? I'm thinking, a question that very often comes up is, hey, I had a bankruptcy X number of years ago. Does that just automatically disqualify me? And then, loan defaults, criminal records, what are the key gotchas?
That's a good way of saying it. So bankruptcies, SBA specifically has no rule on that. They leave it up to the lender. And every lender is a little bit different. During the height of COVID, that door really shut with lenders. They didn't want to monkey around with applicants who had bankruptcies. That door's opening back up again. What I recommend people to do is that if you've had a bankruptcy in the past, is in your business plan application package that you're preparing, is write a short email, memo, letter that explains what happened and why. When did it happen? What happened? Was it due to medical issues, death of a family member? Everybody has some kind of unfortunate history in their past, and explain it to the lender. The key is don't not disclose it.
Don't hide it.
Don't hide it. It's going to come up. Just play your cards and be professional and proactive about it. Just explain it. I would also say the same about credit reports and credit scores. Know your credit score going in. I can't tell you how many people I talk to on an annual basis. When I ask them that question, how's your credit? They'll tell me, I don't know. You need to know. And there is a website you can go to, and Warren can provide it to you, where you can pull a free credit report once a year. There's no charge for it. You won't get a credit score, but you can see your report. And the good thing about it is they don't try to sell you anything. So I like that.
Okay.
So be prepared to explain that to a lender. And if you don't have what you consider to be a reasonable credit score, you probably want to go through some repair and get it fixed up before you apply, because it's going to be an anchor in the water.
Okay.
It doesn't have to be perfect, but it has to be reasonable.
Okay.
Okay. You mentioned criminal history. That isn't necessarily an automatic decline. There are some more extreme versions of that would be a carve out. If someone's currently under probation or parole, they are ineligible to apply for government loans.
Okay.
If there is a stacked up group of unresolved misdemeanors or felonies, that can certainly clog it up. But somebody who got a speeding ticket, it's not a big deal. But it doesn't come up very often, but it does come up. And just kind of like the bankruptcy, if there's something in that you need to be able to explain it to the lender. Don't try to disguise it in any way, because it's going to come up.
Okay.
Because SBA runs you through the FBI computer when you apply. So if there's something out there, they're going to know it. And if you don't disclose it, it's really tarnishing your application.
Good advice. That's really great. Now, assuming that we've gotten past that point, particularly here in Idaho, and I would say Washington as well, we are blessed by the fact that whatever community you live in, there seems to be a wide choice of banks out there. How does a person go about selecting a bank to go talk to?
Well, that's an inexact science for sure. And oftentimes, Warren, I tell people, consult with the SBDC or ourselves, because we're all working with these lenders day to day, and we can probably give some input and ideas, because we know what those lenders are typically looking for and what they're not looking for. Just to, again, rattle off some stories. There are some lenders who will not, under any circumstances, consider loans to startups. So we could help you maybe not talk to those folks, because why waste your time and waste theirs? There's one lender in Northern Idaho that cannot accept any loan request of less than $1 million. So it doesn't come up a lot, but if you've got a request less than that, you probably don't want to talk to them. Not every lender provides SBA loans. An example of that would be our good friends at Washington Federal. They do not do SBA loans.
Oh, okay.
That doesn't make them a bad organization at all. They're great people. They just don't do that. I think they will someday, but at the moment they don't.
Okay.
There are some, one of the things I recommend to people is, even if they make SBA loans, are there particular industries that they're uncomfortable with? Some lenders don't like lending to hotels or assisted living centers, restaurants and bars. They're just not comfortable in that space.
Okay.
And I think you're right, Warren. I think Northern Idaho in general is very fortunate to have a lot of really high quality lending organizations. And that's just a matter of trying to fit in that box, so to speak. And if for some reason a lender doesn't have an interest in your particular project, don't get your feelings hurt. It's not personal. It just doesn't fit what they do.
Yeah. Okay.
So, but we can help. SBDC can help direct people to resources.
Okay. And as a little bit of a follow on to that, how do credit unions fit into this picture?
Well, increasingly, credit unions are becoming much more active in small business lending and SBA and USDA programs. In Northern Idaho, and I guess Idaho in general, there are only a few left that don't do SBA loans.
Interesting.
Yeah, so I cannot think of any credit union in Northern Idaho, Warren, that doesn't offer at least the core SBA programs. They may not offer the more exotic versions like import-export lines of credit, but the core stuff, that I think all of them in Northern Idaho do that.
Okay.
So I think you'd be okay there.
Boy, I tell you, over the last 10 years or so, that is a change.
Yeah, it is. Yeah. In my banking life, credit unions weren't particularly active, but that certainly has changed.
Okay, good. So, so people have potentially a wide variety of sources, opportunities, and so they as they start to think about picking one, what are the kinds of things you talked about? A person has to disclose things in their loan application. What are the kinds of things that lenders are going to be asking business owners to provide?
Okay.
What goes into this thing called the loan application?
Well, from a big picture standpoint, what I often tell people is you have to be able to explain your application both in words and in numbers. So let's start with the words part. A business plan, explaining what are the products and services that you propose to do, or what are you currently doing if you're an existing business? Who are your customers? Who do you sell to? How do you sell? What's your marketing philosophy? Again, just if you're sitting in the living room trying to explain to somebody what you do, put it on paper. And SBDC's got some great resources for people to help them not only start their own business plan, but to refine it. SBDC also has some resources that they can provide, find samples of business plans for specific industries. So that's the word part, is what is it that you're doing? Who are you? Who are the owners? What are their life experiences? What's their training, education?
So kind of a resume.
Bios, resumes.
Okay.
We routinely hand out resume forms to people. You can get them off the internet for sure. So who are you? What are you doing? How do you do it? What's your niche in the marketplace? Is there an undersupply or oversupply of the things that you provide? Is there a niche that people need to know about? I, for one, am continually amazed that every week that goes by, there's something new that I've never heard about before. It's a new product, it's a new service. And what a pleasure it is to learn together about how those things work. One of the loans that I worked on just before I retired was a large SBA 504 loan for climate controlled storage of honeybees.
What?
Yep. Yeah. And I didn't know there was such a thing. But just by examples, I didn't know that, and wouldn't have had any reason to know that. But it was fun. It was fun to go through that project and learn. So from that perspective, don't necessarily assume that the banker that you're talking to really understands what it is that you're doing. Give them the down and dirty version. Help them understand what it is. If it's intellectual property that you're selling, is it whatever it is that you're doing, explain it in words that they can understand. And then that's kind of the word side of it.
Okay.
The numbers side of it, as we've talked about, is explain what it is that you need and why. What does that math look like? And it doesn't mean like you need to go out and spend tens of thousands of dollars with an architect to design a building, but just estimates would be good. If I know, Warren, you and I talk about building leases a lot, and if you're not sure what you're going to have to do to make a building usable for your particular purpose, if you're going to lease something, talk to the regulators. Maybe that's the city planning department, the county. What is it that you're going to have to do? Are you going to have to put in handicap bathrooms, a handicap ramp, a fire suppression system, a secondary ingress and egress point? Those things will come back and bite you if you don't know. And those people all provide that information for free. There's no obligation. But being able to explain what do you need the money for, how you're going to spend it, and then the elephant in the room is show them how you're going to pay them back.
Yes.
Yeah. because not only is that important for the lender, but I think it's important for the small business owner. What's the break-even point? How many dollars in sales do you have to generate in order to cover your fixed and variable costs? And ultimately, your objective is to make a profit. And if you're not making enough profit to pay yourself and to pay the bank back, then you've got more work to do.
That's a problem.
Yeah, that's a problem. So some of the projects that we've had that have been most successful in getting loans approved have fully inclusive packages that are presented to include your personal financial statement.
Okay.
If you don't have a form for that, SBDC can provide one. We can provide one.
Okay.
Because the lender's going to want to know all of the assets and all the liabilities of the people that are going to own the company. Tax returns on the owners.
Okay.
I typically recommend that you provide 3 years. Some lenders only require 2, and that's fine. Give them 3, and they can throw one away if they don't want it. If you're currently in business, I'm going to pause on this one for a minute. If you're currently in business, provide a current balance sheet and income statement. And that's something that we deal with all the time. I'm always surprised how many small business owners don't keep current books. Their income statements and their balance sheets are not up to date. They're not accurate. And that's not a good sign for you as a loan applicant if you're providing inaccurate information. Provide that in your application package. Show the lender how you're doing year to date. So along with your projections,
I'm gonna jump in.
Please do.
You've given me an excellent example to do a commercial for the SBDC. Because if people are working with the SBDC, one of the things that we're going to drill down into are those numbers, and we will not push you toward a bank until you've got a good set of numbers together, because we don't want you to have that experience of maybe having a great idea but no numbers, and so we're just not going to let that happen. So thank you for that.
Yeah, great segue.
Yeah.
If you're a franchise, if you're buying a franchise or you are a franchise, provide the franchise information. It's called an FDD, franchise disclosure document. Help the lender understand what the franchise is, how it works. A little bit of background on that, I think, is always helpful. If the small business owner is looking for an SBA loan, SBA actually has a franchise registry, and it's not a confidential document. We can look it up for you. We can provide it to the SBDC, and they can look it up for you. It is constantly changing, but knowing whether a franchise is eligible for SBA or USDA or EDA funding doesn't come up very often. Typically, Warren, on franchises, the only thing that it doesn't happen much anymore, but is that you can't have a franchise or a small business concept that is discriminatory. The old example that we used to use when we were teaching SBA lending classes was the gymnasium that would only accept women as members. I'm not saying it's wrong. That's someone else to decide if that's right or wrong. But that, in the view of the federal government, that is discriminatory.
Okay.
So those are the kind of things you'd want to work through. If you have very important vendor agreements that come into play, great example of that are like convenience stores. Explain to the lender who you're going to buy your fuel from, and what is that? Is that a contractual agreement, or is it just open market? Most fuel suppliers have incentive programs, and a lender's typically going to want to know what are the rules that relate to that. So if you have vendor agreements, that would be good. If you have, we're talking about leases again. Warren and I talk about building leases all the time. If you know where you're going to put this thing, tell the lender that. If you're not sure, that's okay too. Just tell them you're out looking for a site and you haven't found it yet. That's all right. But if you do know it, describe it. Where's it located? How many square feet? Is it zoned correctly? How does it fit into that particular niche, traffic flow? Just a little bit more about that. I mentioned costs. As small business owners are identifying their equipment costs, because it's so easy to do anymore, if you've got access to even web-based equipment quoting, maybe that's through a vendor's website or eBay or wherever it might be, print it out and provide it to the lender. That's going to give credibility to what you're doing, in that you're not just making this stuff up, that you've actually done your homework and you know what this equipment costs. Don't forget freight, installation, and sales tax, which can really add up to a lot of money if you're not paying good attention. If you have inventory needs that are specific, and this, I think, a popular topic I know that SBDC's got training on, is supply chain management. Do you have access to an adequate level of inventory? And do you have backup vendors? I had a client last summer that I was working with on a different part of the state. Warren's heard this story. I'll make it really quick. She went out, she wanted to open a retail store from a leased location. She went out and signed the building lease. She didn't have any financing lined up, but she signed the lease. And when she went to open the store, she learned that there was no supply.
Ouch.
She could not find any inventory from it was a furniture store. Lead times on furniture has always been long, but it's longer now than it's ever been. She couldn't find any inventory. And that was 7 months ago. She's made 7 monthly payments on her building lease, which is vacant.
Wow.
Because she cannot buy inventory. So inventory management, supply chain is really important. Help the lender understand that. I wrote down just to mention, because I forget about it at times, if you're buying a building, be mindful of any environmental issues that might be with the building or surrounding properties. Warren, you might remember you and I walked through a building in downtown Coeur d'Alene once, and, and we both kind of looked at each other like, this thing's got to be full of asbestos. And because you don't know. And it could be an old gas station site or an old dry cleaner. So if there's environmental stuff that needs to be investigated, that kind of reporting is becoming very inexpensive anymore. So be mindful of that. Another thing that's I think becoming increasingly important in a business plan is to discuss, I call it COVID resilience. How susceptible is your business to COVID related impacts? Whether that could be labor or shutdowns, or there were times when daycares were shut down for various reasons, maybe by federal requirement, state requirement, or the fact that parents weren't taking their kids into daycare because they couldn't go to work. So those kinds of things I think are important for small business owners, but really important for lenders to understand that. So that's kind of my short list. I mean, that's kind of rambling, Warren, but
no, that's excellent. Particularly the COVID resilience part that has kind of snuck up on us, and that's a good call out for us to be mindful of that. So you touched on the lease thing, and so that's another segue into another topic.
Yeah. Okay.
We know how much we want. We've found the bank. We've started the loan application process, and we're sending stuff to the bank. Meanwhile, we've found a place, and so. But the place that we've found and we want to lease, the landowner's really putting a lot of pressure on us to sign that lease. And what are the pros and cons of signing that lease while you're in the middle of the loan application process?
Well, thanks for setting me up on that one. The downside is pretty obvious, that if for any reason, whether it's financing or any other reason, you actually can't run your business in that location because you couldn't get a loan, the remodeling costs are too exorbitant. We had a case just a few months ago where a lady wanted to lease a building for a doggy daycare. And nice little business plan, but as it turned out, had she signed the lease, she'd had a problem because a doggy daycare was not allowed in that location.
Oh,
Yeah. So there's just another example of a downside. And I understand there's short inventory right now. That's probably not going to change in the foreseeable future. But escape clause, if you're going to sign a lease, escape clauses that you're going to go ahead and sign it, but if something goes wrong, you have an opportunity to terminate it.
okay.
That may not be to the satisfaction of the building owner or the property manager, but and these stories, they don't always turn out bad, but it's real money. So if you're gonna sign it, do it with your eyes wide open. And if it just wasn't meant to be, then it wasn't meant to be, I guess. But I don't know, Warren, what's your background on that?
No, that's a good point. In the recent past, I had someone who found a great place, and the landowner really was putting pressure on him that he had plenty of other people lined up to take this. So I said, okay, just like you said, sign it with your eyes wide open, but ask the landlord to not start the rent for 3 months.
Good point.
For the period that you need to do your tenant improvements, move your equipment in and all that. And the person was actually successful in that. So
Great.
They
Great.
did sign a lease, but the rent would not start, or the rent payments would not start for 3 months.
Great point.
And that seems like it's going to work out for everyone. Now, the other thing.
Let me interject
Yeah.
one thing on that, Warren. I completely neglected, is that lenders and SBA has some specific requirements for building leases. And before someone signs something, they should be mindful of those requirements. And I don't think they're unreasonable requirements. I think they're good business. But be mindful of what those requirements are. And I'll give you the big one, but there's a few others. Is that the term of the lease has to be renewable for at least the term of the loan. So let's say that you've got a 7-year loan. The lease has to be for 7 years, or 5 years with a 2-year renewal clause, or a 1-year lease with 6 annual renewal clauses.
Okay.
But the key is it's got to add up to 7. And the objective there is the lender and SBA do not want the small business owner to be kicked out of that building during the term of the loan, because that is a real issue anymore, where building owners are getting offered tons of money for their building as long as they'll kick out the tenant.
Okay.
So be mindful of SBA requirements. We can provide those. It's only like a page worth of information. Again, there's some other little nuances, but be mindful of that building term. It will come back and bite you.
Okay.
So be mindful of that.
Another one you touched on earlier is a couple of times is the absolute need to check your city, your county planning departments, code departments, zoning, intended use, all of that kind of stuff. Is there any more you'd like to add to that?
I think I've beat that drum a lot, I'm sorry to keep repeating it. It hits us square in the face every day.
And I'll add one to it. I worked with someone a couple of years ago. They wanted to open a business and found the right building, and did their homework, had city zoning planning come out, look at it. They blessed it and all that. They signed the lease. They actually got a loan from a lender. And then the city came back and said, oh, we forgot to tell you, you don't have enough off-street parking spaces for your intended use. And they took that to court. No, didn't take it to court, but got a lawyer and tried to work with the city. The city would not budge. Fortunately, they were able to get out of the lease, repurpose the loan for another location, and it worked out okay. But
great example.
You almost can't knock on those doors too many times to make sure you're getting the right answer.
And get it in writing.
And get
Which a lot of cities and counties don't want to do that. You know, the question is, okay, that sounds great. Will you send me an email to confirm that? No. Yeah. So, but I don't think it hurts to ask.
No.
Send me an email confirming what you just told me.
Absolutely.
Yeah.
Absolutely.
Good point.
Absolutely. Now, another one, you know, we've run up against many times is, don't take out any additional debt while you're in the process of applying for this business loan. Any good stories on that one?
Oh yeah, I'm living one of those right now.
Oh, okay.
Yeah. Yeah. So if you kind of walk back through the process, that the small business owner has provided all the package that we just described: a business plan, personal financial statement, cash flow, all those wonderful things. And then during that process, something changes. And now all of a sudden there's more debt or less cash or a combination of both.
Yeah.
Because the small business owner has done something different than what they've told the lender. And Warren, I haven't told you this story, but it's a true story. Is we're working with some folks right now on a pretty good sized project in the Post Falls area. And the owner, during the application process, changed houses and now has $900,000 in additional home loan debt than he had at the time of application.
Wow.
$900,000. Now, okay, if that was 50,000, it may not turn something upside down, but not a good idea. You know, wait until, if you got to have that new boat, wait till you get your financing approved, get your funding in place, and then go get your boat if that's what you need to have. Just resist it. Just don't go do that. Don't go run up credit cards. Don't do any of that during the loan application process. Stay the course. You'll be much further ahead if you will do that. Thanks for the introduction to that topic. Yeah, I like it.
Well, and it leads us to another one that has come up from time to time, and that is, you've submitted all these documents, and you talk about how you've got your income comes from a current job, and you intend that income to carry you through the startup your business and all that, and then you quit your job.
Yeah, you don't want to do that. You got to stay in there until you've got everything in place. Because just from a personal standpoint, you never know what could go wrong. Until that loan's closed and everything is in place, a lot of things can happen. Again, just a quick story, Warren, is we were working on an EDA loan. I guess it was last month, and the lender had issued a commitment to make the loan. We were going to partner on it with our RLF money. The lender had issued a written commitment to make the loan. 2 days before closing, the lender called the applicant and said, "We changed our mind. We're not going to do it." Now, that brings up a whole nother series of conversations. But in that case, had the applicant quit their job and there's no loan, and the seller it was a purchase of an existing business, the seller said, okay, I'm just going to keep it.
Wow.
So they're not under contract anymore. The seller changed their mind. There is no loan, and this person has no job. So stay on it. Stay on the clock. Stay on the clock until you can absolutely end that and do it with, again, your eyes wide open.
Okay.
Yeah, it doesn't happen very often, but these are the stories that stick in my mind.
Yeah. No, I hear you. Just one similar one. Many years ago, I worked with a lady who had an absolutely fantastic restaurant concept, and the location, everything was just everything. All the stars were aligned, and we had a final meeting. She was going to go to the bank to button up everything, and she called me the next morning, terribly distraught because her husband had gone out and bought a $60,000 pickup truck.
Oh, boy.
And that just completely blew everything out of the water.
Yeah.
So no, those
I
things
can do
are
that.
real. Now we've gone through all this kind of stuff. And maybe this is a question we could have had earlier, but how does a person go about presenting themselves when they go see the loan officer for the first time? You can talk on the phone a lot, you can email a lot, but when you're actually going to show up to talk about in person, how should you present yourself?
I think generally people do a pretty good job with that, Warren, has been my experience. But there's always room for improvement. I recommend to people that they, if you're going to make an appointment, whether that's an in-person or a virtual appointment or a phone appointment, is be on time. I've had some bad luck with that this week. I've had 3 appointments that were absolutely defined, agreed to, and the small business owner didn't show up.
Wow. So,
I mean, that's not off to a good start.
Yeah.
So be on. If you can't make it, communicate. If you can't be on time, communicate. I recommend that you kind of rehearse your pitch, your elevator speech.
Good.
And you can do that with your small business development center advisor. You can role play that. Have your talking points, and don't waste the banker's time. They're busy. They're very busy. So show up on time, be professional, look professional.
There you go.
Yeah. If you're going to open an auto repair business and you're currently an auto mechanic, and I'm not throwing anybody under the bus, you don't want to walk into the office and trace your grease and your mud and crap to the banker's floor. That's not going to go over very well. So just kind of act the part and have your pitch ready to go.
Okay.
And again, I think people generally do a very good job with that.
Okay.
But be prepared.
Okay.
The old thing we had in the banking world, Warren, was is that the applicant that would come in and they say, well, I need a loan. We'd ask them, well, how much do you need? And they say, well, how much can I get? Well, that's not, you don't know the answer to the question. You need to be prepared to answer that question. What do you need? And for what? Don't just say, how much am I eligible for? It's not like getting pre-qualified for a home loan. It's completely different. So go in prepared.
Okay, good, yeah. Good. All right. Now we've put all the information together. We've submitted it. Everything the bank has asked for, we have submitted. What's happening after that? It's kind of like deadly silence after that. Does it just sit on the bankers' desks and age for a little while, or what's happening there with my loan application? What are you all doing?
Yeah, that's an outstanding talking point. I highly recommend that people have adult conversations with the potential lender, asking them, do you have time to work on this? I don't think that's an unfair question. If you don't, if they don't, it's okay. It's okay to ask them that. I think it's okay to ask a banker, how long does this process take? What can I do to support the process? What's the general turnaround time? And then it's kind of like managing each other's expectations. And in my banking life, we call it the slow no. Is you really want to avoid that. Is if the bank, you need to stay on it in a polite, professional way, and continue to inquire, again, respectfully, and not to try to put yourself in the front of the line necessarily, because that's not fair. To make sure that you're providing the information that they need, and that the bank's able to provide, a bank or credit union for that matter, a timely response. And what's going on behind the scenes is what should be happening is that the loan officer and the bank or credit union are processing your applications, staying in full communication with you about what they need that they don't have, problem solving, asking questions. Maybe there are occasions, certainly, when you'd have a joint meeting with the lender and the SBDC person to collaborate on trying to put together things that the lender needs. But again, unlike applying for a loan for a car or a house, you're not going to get an answer in 48 hours. It's not going to happen. This process takes time. But being a bit of a polite nag is okay. It's not going over the line and making yourself to be a nuisance. But you don't necessarily always want to have the banker with your application on top of their desk, but you want it to be kind of on their mind.
Okay.
That they're working on things.
Okay.
And again, if they don't have time to work on it, just tell me that right up front. I'm going on vacation to Europe for a month. Okay, I needed to know that. I'm glad to know that now. Is there someone else here at the bank that can help me, or should I just go somewhere else? And that's okay. Yeah. Okay. So full communication, I think, is always a good idea.
Good.
Yeah.
Okay. So now we've gone through all of that, and the bank calls you, emails you, whatever, and says, hey, good news, your loan is approved. Does that mean that you go down to the bank and they hand you a big check with the zeros behind the number? No, you really can't just go walk into the vault and help yourself to the money. But what the lender should do, and what the small business owner, I think, should ask for, is the loan approval. It's called a conditional approval in writing. You want to know the terms and conditions of the approved loan. In the SBA world, that's called an authorization. That's a document that's got it's got the SBA wording in it that says that the loan has been approved. If it's not an SBA loan, it's just a conditional commitment letter that says we have approved your loan subject to the following conditions. And you really should read it and understand it so that you can comply with it. Because that document is going to tell you about everything you need to know about term and rate and fees and collateral and guarantees, and anything that's going to be required, it should be in that document. An example of that would be, and I neglected to mention it earlier, Warren, is that especially in small business loans, it's very, very common for the lender to require life insurance on the principals. Oh, okay.
So if you have life insurance, great. Make sure that you have enough. If you don't have it, then you should be mindful of it and start doing a little preliminary research as to what that cost might be. How long does it take to get it? It is taking longer and longer to get life insurance.
Okay.
I think that's just a matter of COVID, that Life insurance companies are busy and they've got reduced staffing, and it's just taking longer. If you can't get life insurance for whatever reason, make sure that you can explain that to a lender and why.
Okay.
An SBA rule on that is if you can't get life insurance, they want to see a letter from an agent saying that you can't get insurance because it's impractical and unaffordable. They require that.
Okay.
So I'm a segue on that because that kind of a front end thing, Warren. But that would be in a conditional commitment letter, an SBA authorization. Are there any life insurance requirements? Any specific liability insurance requirements? If you're a medical practice, for instance, that's common that you have to have professional liability insurance. If you're a bar serving alcohol, you'd have to have something in the form of liquor liability insurance. Okay. Those are all things that you'd want to address on the front end before you apply, because those are all costs that you'd want to identify in your forecast. But don't be surprised to see it in the letter. Okay. And I'll say this, Warren, and I mean this in the best of spirit, is that if the lender is unwilling to provide you a commitment, a conditional commitment in writing, you're not done yet.
Good point.
Something is wrong. And that's when you call up Warren or Brent or Bill Jung or somebody and say, what do I do? Okay. Because my lender will not put any of this in writing. That is a flashing yellow light. And it does come up. Okay. Fortunately, it does come up. Okay. So it's okay to ask for it. I recommend it. You'll normally get it. If you don't, it's time to raise the flag. Okay. Excellent. Great advice. Yeah. Great advice. Well, I think we've gone through the gamut of questions, and I certainly appreciate all of your very candid and informative answers. So I'm going to ask the participants if there are any questions you have. You at this point, I'd say feel free to unmute and ask those. Here we've got one on the chat box. What type of loan do you need when wanting to buy property and land to build the business on? Great topic. That particular request could fall under a lot of things. It could be a conventional loan. It could be an SBA loan, a USDA loan, or an EDA loan. So that could fit in a lot of different things. The pause point on that is that if you want to acquire the land prior to going through the process of getting your building concept, ideas, and costs, and financing in place, there are rules to what's called a bridge loan. So if you're going to take out some financing on that land before actually applying for the term loan, the construction loan, let us know and we'll help guide you through that. But specifically, I'm a big fan of the SBA 504 program because it provides the very best long-term fixed interest rates. Right now, that rate is about 3.2%. So 25 years, 3.2%. Warren, in our lifetimes, that's pretty cheap money. That's almost free money. That's cheap money. So it is. Great question. It really will fit in a lot of different things. We help people, as I know Warren does, help people navigate that as to what your options are. I will say, tongue in cheek, that, and I'm allowed to say this because I'm an old banker, is oftentimes what a banker wants you to do is use the program that works best for them. I'll let you digest that for a minute. And I think you have to go in informed and say, well, okay, let's talk about all my options. Yeah. And do your own research and SBDC, and we can help you with that. But especially in a case like that, really good question, where it does fit in a lot of different things. Okay. Yeah.
We got another question. How do you know if a location qualifies for an EDA loan?
Those rules recently changed, and generally to the positive, that at the moment, there is no location in the state of Idaho that is ineligible for an EDA loan.
Oh, okay.
Yeah, that I think is a positive outcome of COVID, if there is such a thing, is they lightened up some of those rules. So if you want to explore that, just let me know, because we administer that program throughout the state.
Okay.
We're not the only ones that administer it. There's different pots of money, but yeah, but the technical answer to the question is you can really be anywhere.
Okay.
Yeah.
So we have another one. What is the most common amount of funding requested and approved for an SBA loan?
Wow. I certainly wouldn't know the national number. We just had a webinar yesterday. I'm going to say on an SBA 7A loan, the average amount is probably around $350,000. On an SBA 504 loan, it would be more than that, probably in the $500,000 range.
Okay.
But there is no minimum.
Okay.
So, I mean, technically, if somebody wants a $5,000 SBA loan, they can apply for that.
Okay.
It probably fits into the micro program the best, but
yeah,
on average, the loans are not. Of course, the number is going up because things are costing so much more. But the last two SBA 504 loans that we've closed were far in excess of $1 million.
Okay.
But that's a little bit unusual.
Okay.
But the number's going up. So, yeah. So there's no minimums. There is a maximum. The maximum is $5 million.
Okay.
You at no point in time can you can you owe SBA more than $5 million.
Okay.
And that doesn't come up very often, but
okay.
Occasionally it does.
We have another question. Does the SBA offer lines of credit versus loans?
God, great. Love that question. Thanks for asking it. So not to get too far into the weeds, but SBA has a line of credit program, and it is called the Express program. So
okay.
let's focus on the word express. Express would lead you to believe that things happen quickly.
Of course.
Not necessarily the case. So I really appreciate that question, because there are some nuances about it. It's a great program, and not every lender who offers SBA loans offers the Express program. And the reason for that is because there's a lot of behind the scenes reporting that goes on, and not every lender has the backroom operations to do that. So if you want to apply for an Express line of credit, again, we can help direct you to lenders who offer that program. You can look it up yourself on sba.gov. But yeah, it's a really good program. And one of the things I like about it, Warren, is that it has a revolving credit feature. So during the first, I have to look it up, they recently changed it. I'm going to say 5 years of the line. At the end of that 5-year period, I think it's 5 years, then it turns out. So if you haven't paid it back in that period of time, then you just start making a monthly payment on it. So great topic, great question. It's for some reason, it kind of falls through the cracks. It's not really visible for some reason. I think SBA, frankly, should do a better job of promoting it. But we are seeing increased activity in that nationwide. So great question. Love that question.
Okay.
Thanks for asking it.
Okay. So here's another good one. I'm a food truck owner looking for a storefront. Revenue is unpredictable. Should I get a part-time job to increase chances of an SBA loan?
Yeah, outside income is always helpful. I think it probably depends case by case, but there's nothing certainly wrong with that concept. A lot of people do exactly that. They'll have 2 gigs going on at the same time. Just measure your time, and do you have the ability to own and operate a storefront or food truck and work a part-time job or a full-time job for that matter? But there's absolutely nothing wrong with that, and it does help the application.
Okay.
Yeah.
All righty. Well, I think, oh, wait. Here's a question. How much does owner occupy help? This is from Tracy. Tracy, can you give us a little more context?
Yeah. Unmute yourself, Tracy. I want to hear more about that.
Building a building and leasing to myself, I think.
Oh, okay. All right, here we go.
Okay, I unmuted, and
Good.
we have already bought a piece of property and are in the process of getting ready to build. We
Okay.
have the site permit, and it's a family partnership. We own commercial real estate and have for years, but
Great.
we're building this building because I couldn't find something for a lease. And we will occupy it and then have 2 rental places as well. And
Okay.
having worked with my banker, we owned a business before and have had an SBA loan. We just sold the business, but is it pretty important to the SBA to look at it as we're more vetted if the people that own the building also own a portion of the business?
Okay. Thanks, Tracy. Let's get through this together, because this has got a few landmines along the way.
Okay.
Okay, and it's okay. So I really appreciate you asking the question up front. Is that SBA specifically, not so much USDA, but SBA has owner occupancy rules. And I'll just say this, and then we'll cycle into your situation. On an existing building, SBA requires that the small business owner occupy at least 51% of the building.
Okay.
That's on an existing building. There are different rules for new buildings. Don't ask me why. It drives me crazy. I don't know why. It's always been this way. So in the case of a new construction or a new building, the owner is required to occupy at least 60% of the building. Now,
Okay. So what if I build the building and don't sign the lease till after it's built?
are you going to occupy at least 60% of it with your own business?
It's going to be square footage close. We had
Okay.
estimated 51%, but what you just said kind of worries me. And I have no extra square feet by the time I meet the parking requirements.
Yeah, you're certainly well advised to do that during the design phase. So let me give you a couple of the other nuances, and we can give you the federal regulations on this if you're interested. It's really not that much. It's only actually about a page and a half out of the federal regulations. But so if you look at the entire project as, say, 100%, the building's 100%, SBA allows you to borrow the money to build the building, the entire building. SBA allows you to use funding to finish out the owner-occupied space. So you can use that loan to finish out the part that you're going to occupy. You cannot use the SBA money to finish out the non-owner occupied space. Does that fit?
It's interesting how they set this up, but it makes me, because one LLC is building the building, and then I will have a separate LLC as the business. So
That's
to
fine.
know that I can't, I guess I need to come in and talk to you guys because as the bank.
Sure.
Because
You bet.
it's,
You
do
bet.
we combine the two? Do we each take out our own SBA loan? So
Yeah, there's lots of different ways to skin that cat, and I mean that in a very good way. We recently had somebody that went through a very similar process and decided to condo it. Why not?
Decided to what?
They created condominiums.
Oh,
So 60% of the building was a condominium, and the other part of the building was a different condominium. So they could get 2 loans. It's a long story, but there's a lot of different ways to do that. Now, again, I'm not throwing my banker friends under the bus, but not every banker knows the rules. So
well, it's kind of how my dad taught me: think outside the box and just figure out how to get it done. So, okay.
There's a great saying is that, I can play the game if I know the rules. And we can help you talk through what your options are. Warren can help. We can all help.
Okay.
But there are ways to get there. Now, another part of it before we walk away from that, and this is for everybody's benefit, is that when it comes to repayment, the SBA will not allow I'll call it the 40%. The rent income from the 40% cannot be used to demonstrate repayment ability.
Okay.
At SBA, their rules are as they presume that 40% is always unoccupied, which may not be the case, but that's the way it works. So these are fun projects. I love whiteboarding. So get a hold of Warren and let's all talk and see if we can help you kind of whiteboard this into something that would work really well for you. But I really applaud you doing it during the planning stage, because you can end up redoing construction and design plans over and over and over again if you don't know what the rules are.
I already have.
Yeah. Okay. Let's just talk about it. And it may be, Tracy, it may be perfectly fine.
Okay.
Yeah.
I'll schedule a meeting.
That'd be fun. Thanks for asking the question.
Thanks, Brent.
Yeah.
So I'm going to put up here, if I can make this happen. Oh, where'd it go? Can anybody see that? That's our North Idaho SBDC website. You can that's nisbdc.com. You can Google us, you can find us, and through the website, you can schedule coaching sessions, classes, all that kind of stuff. So it's all available, and I encourage anyone and everyone to reach out to us. I want to especially thank Brent this morning. Thank you so much for
my pleasure. It's a lot of fun.
And I hope everyone got something out of it. And I wish you a very good rest of the day, rest of the week, and a prosperous 2022.
Yeah, stay healthy.
Stay healthy and be good to your banker. So thank you very much.
All right, see y'all.
And I hope to see you again sometime.
See ya. Bye.
Bye now.